Hi, I'm Saima, an experienced management consultant. I've spent last 12 years in large organizations providing advisory and consulting services to business clients within the financial services, capital advisory, sports media, and marketing and advertising sectors. The financial models being offered at Finanalytix Lab provide businesses, investors, and financial professionals to analyze performance, forecast future scenarios, and make data driven decisions. Welcome everyone to today's video on using predictive analytics to forecast market trends. In this video, we'll explore how organizations can leverage predictive models to anticipate shifts in consumer behavior and market conditions. We'll look at how predictive analytics transforms raw data into actionable insights that inform strategic decisions. So let's get started. So here's our roadmap. We'll begin with the basics of predictive analytics. We'll explore its strategic role in market forecasting and delve into the techniques, data, tools, and best practices. We'll also examine real-world applications, address current challenges, and discuss what lies ahead in the predictive analytics space. So the key topics we will be covering is what is predictive analytics, importance in market forecasting, key techniques and models, data requirements, and using real-world applications, best practices, challenges and mitigations, and also we'll discuss the future of predictive analytics. So, predictive analytics is all about using historical data to forecast future outcomes. For example, a retailer can use past sales data to predict demand for certain products in the upcoming season. These predictions rely on machine learning, statistical techniques, and large data volumes to be accurate and insightful. So, predictive analytics involves using data, statistical techniques, and machine learning models to identify patterns and predict future outcomes. Unlike traditional analytics, which focuses on past performance, predictive analytics forecast what is likely to happen next. The key components include data collection, for example, gathering historical and real-time data from multiple sources, and then data processing, meaning cleaning and structuring data for analysis. Then applying algorithms to detect trends and correlations. Machine learning, so training models to improve accuracy over time. And then deployment and monitoring, so implementing predictive models and refining them based on the new data. So why does forecasting matter? Imagine a fashion brand anticipating a surge in demand for sustainable clothing. With accurate forecasts, they can align their supply chain and market strategy, gaining an edge over competitors. Predictive analytics helps turn guesswork into a precise and agile strategy. And now we will cover off some of the key predictive techniques. There are different models suited for different tasks. Let's say time series models like ARIMA are perfect for predicting future sales based on past trends. Regression can be used to understand the relationship between pricing and demand. Neural networks are used by e-commerce platforms to recommend products by predicting consumer behavior. Retailers and e-commerce companies analyze purchasing patterns, social media sentiments, and browsing history to predict future buying trends. So this helps in inventory management, personalized marketing, and dynamic pricing strategies. We can also look at stock market forecasting. So financial institutions use predictive analytics to analyze stock price movements, trading volumes, and economic indicators. Machine learning models such as ARIMA, autoregressive integrated moving average, and LSTM, long short-term memory networks help predict stock trends with higher accuracy. So let's look at another scenario. It's called demand forecasting. So manufacturers and supply chain managers use predictive models to estimate product demand, reducing overstocking or shortages. Techniques like time series forecasting and regression analysis improve accuracy in sales prediction. Then businesses also analyze competitors' pricing, marketing strategies, and customer reviews to predict industry shifts. AI-powered scrape and analyze vast datasets to uncover emerging trends before they become mainstream. So that's the kind of competitive intelligence used by using predictive analytics. Predictive analytics helps financial and insurance companies assess risks by analyzing credit scores, market volatility, and geopolitical factors. So this help enables proactive decision making to mitigate potential losses. So now let's look at the data requirements. To conduct data analysis, high quality data is critical. For example, Netflix combines user viewing history, which is internal, with content trends, external, to predict which shows to promote. The better the data, the more accurate the forecast. It's important to clean, enrich, and integrate diverse data sources. The benefits of predictive analytics in market trend prediction is improved decision making. Businesses can make informed choices based on data rather than intuition. Another benefit is cost reduction. So optimizing inventory, pricing, and marketing reduces unnecessary expenses. Another benefit is enhanced customer experience. So personalized recommendations and targeted promotions increase customer engagement. And another benefit, which is the competitive advantage, early trend detection allows companies to innovate ahead of competitors. So let's consider another real-world application example of Amazon. They use predictive analytics to forecast product demand by region, so reducing delivery times and optimizing stock levels. In finance, companies use it to forecast stock prices and assess investment risk. In healthcare, predictive models help forecast patient readmission or disease spread patterns. Now let's look at some of the tools and technologies. Python is widely used for building models with libraries like scikit-learn and Prophet. Tableau and Power BI help visualize these insights. Cloud platforms like AWS SageMaker and Azure machine learning streamline deployment and collaboration. For example, Walmart uses Azure machine learning to scale their demand forecasting models globally. Okay, so now let's consider the best practices. Start with a clear business goal, say predicting holiday season. Clean your data, split it for training and testing, and evaluate multiple models. A/B testing and live model monitoring are essential. Amazon, for instance, continuously retrains its model with fresh data to stay relevant. And don't forget, data can be biased or incomplete. So if you are predicting real estate trends with outdated property data, results will be skewed. Use cross-validation to avoid overfitting. Be cautious with black box models. Explainability tools like SHAP values are gaining traction. So stay compliant with data privacy laws like GDPR. In the future, predictive analytics will be faster, more user-friendly. Auto machine learning tools like Google AutoML allow non-experts to build models. Real-time data from IoT devices is enabling predictive maintenance, and generative AI with simulate market scenarios for strategic planning. The landscape is evolving rapidly, so stay curious and adaptable. Also, as AI and big data technologies evolve, predictive analytics will become even more sophisticated. So key advancements would include integrated with AI and deep learning, more accurate and adaptive models, real-time analytics, meaning instant predictions using streaming data, explainable AI, transparent models that provide insights into decision-making processes, and then predictive maintenance, combining sensor data with predictive models for industries like manufacturing and logistics. So, predictive analytics is transforming how businesses anticipate and respond to market trends. By harnessing the power of data, companies can gain foresight into future opportunities and risks, ensuring long-term successes. However, to maximize its potential, organizations must address data quality, ethical concerns, and models reliability. As technology advances, predictive analytics will continue to play a pivotal role in shaping the future of business strategy. So we have covered a broad spectrum from foundational concepts to advanced tools and real-time use cases. We will welcome your comments and thoughts in the comment section. What's your experience with predictive analytics? And where do you see the biggest opportunities or roadblocks in your industry? And if you would like a deeper dive into any specific aspect of predictive analytics in market trends, so please let us know. Thank you for watching.